Welcome to the deep dive. We're here to cut through the noise and get straight to the insights you need. Today, we're taking a close look at Motilal Oswal Financial Services Ltd, MOFSL as they're known. We'll be unpacking the latest Q1 FY26 performance. Yeah, we've got the investor presentation, the press release, and the notes from the board meeting right here. Our goal to pull out the key nuggets, maybe some surprising facts, and give you a really clear picture of what's driving this major player in India's financial sector. Think of this as, your personal guide through it all. Okay, let's jump right in. So MOFSL just announced what they're calling their strongest ever quarterly PAT. We're talking a record total profit after tax, that's their bottom line, basically of 1,430 crores for Q1 FY26. Just to give you a sense of scale, a crore is 10 million rupees. So that's about 14.3 billion, roughly $170 million US. That's a huge 40% jump year on year. And their consolidated net operating revenue also up strongly 24% year on year, hitting 1,412 crores. Operating PAT grew 21% to 522 crores.
And what's really interesting, I think, is how they're doing this. It comes down to their strategy, this twin-engine growth model. It's actually inspired by Warren Buffett's Berkshire Hathaway model, combining their core operating businesses with these quite savvy strategic treasury investments.
Right, so it gives them synergy, but also stability.
Exactly. It helps them handle market bumps, shocks, but also grab new opportunities when they pop up. Take their treasury book, for example. It's delivered a really healthy 20.1% XIRR since they started it.
XIRR, that's the extended internal rate of return, right? Good for those uneven investments.
Precisely. And it's grown at a remarkable 43% compound annual growth rate, COGR. It's not just about the returns, though. It shows they have serious skin in the game, real confidence in their own strategies, long-term commitment.
And it's not just the top line. Looking at the balance sheet, things look solid, too. Their net worth is robust, 12,597 crores. That's up 28% year on year. And the return on equity, the ROE for Q1 was 48%.
Yeah, 48%. That's exceptionally high for a financial services company this big. It really points to efficiency.
And maybe a strong competitive edge, how they're using their capital.
Definitely. Generating that kind of profit on shareholder investment, it's a powerful signal. Strong management, good market position.
Okay, so let's peel back the layers a bit. Which parts of the business are really, firing on all cylinders? It's quite diversified.
Right, let's break it down. First up, wealth management. That includes retail broking and distribution. Their reported revenue of 568 crores, up 7% year on year, decent.
Yeah.
And pay was 174 crores. Their assets under advice, AUA, grew to over 3.12 lakh crores.
Wow, 3.12 lakh crores. That's over 31 trillion rupees, or about 374 billion US dollars. An 18% jump year on year. That's a solid foundation. But what's the standout there for you, especially thinking about, say, recurring revenue?
The key thing is the distribution revenue. It just surged, up an incredible 152% year on year to 135 crores.
152%.
Yeah. And that pushed its contribution to the segment's revenue from just 10% up to 24%. So this isn't just a blip. It really signals a strategic shift, towards more stable recurring income.
Makes sense. Less reliance on just transactional brokerage, which can be up and down, more predictable growth.
Exactly. And they're growing clients, too. Added about 1.2 lakh, 120,000 new clients in Q1. That brings their total base to over 1.36 crore, 13.6 million clients, and 88% year-on-year growth, which is huge.
And the revenue per user?
Their consolidated ARPU, average revenue per user for active clients, was over 40,700 a year. Market share looks decent too, 7.1% in cash volume, 7.9% in F&O premium turnover.
Okay, switching gears now. Asset and private wealth management. Sounds like another big growth area.
Oh, absolutely, a major engine. Total revenue here grew 46% year-on-year to 560 crores. PEAT up 43% to 224 crores, and their total asset management AUM, assets under management, hit over 1.60 lakh crores. That's a jump of 64% year-on-year.
64% AUM growth. What's really driving that performance?
Performance is a big part of it, yes. Get this, 92% of their asset management company, their AMC AUM, is actually outperforming benchmarks on a one-year basis.
92%. No wonder the money's flowing in.
Exactly. It's led to really strong net flows. Their mutual fund AUM, for instance, almost doubled, grew 90% year-on-year to over 1.16 lakh crores.
Wow.
And SIPs, systematic investment plans, are booming too. Flows were 3,437 crores just for the quarter. Their total SIP AUM grew 78% year-on-year to over 26,000 crores.
So they're capturing that market share increase.
Significantly. Net sales market share, if you exclude hybrid funds, went from 4.5% up to 9.8%, And their SLP market share climbed from 1.9% to 4.3%. It really shows investors trusting them more and more. And it taps into that bigger Indian trend, right? Moving savings into financial assets.
And it's not just mutual funds in this segment, is it? What about private equity?
Right, they're making big moves there too. They launched IBEFV, that's their India Business Excellence Fund, 5, aiming for 8,000 crores. They completed the first close in July 2025, already getting over 80% of that target met.
Pretty successful launch then.
Very. And they also closed their IREF2 fund, the Realty Excellence Fund, with a gross IRR of 18.3%. Plus, they raised 2,000 crores in their IRE fixed fund.
And private wealth specifically.
That's growing nicely too. AUM up 25% year-on-year to over 1.74 lakh crores. And their RM, relationship manager productivity improved, reached 2.8 billion per RM this quarter.
Which ties back to what you were saying about scaling up to meet that demand for advice.
Precisely. Shows they're managing that growth effectively.
Okay, next up, capital markets. That's institutional equities and investment banking. Another strong quarter here.
They called it their best ever quarter, actually. Revenue shot up to 207 crores. That's up 54% year-on-year. PAT grew 64% to 94 crores.
Best ever. What drove that? Deals.
Deals, definitely. They completed 16 deals in Q1 FY26, including some big block deals. Totaled over 29,500 crores in issue size. That performance put them at #1 in the QIP League table, qualified institutional placement, and #3 in the IPO League table by number of issues.
So really strong in helping companies raise capital.
Very strong.
All right, let's pivot slightly. Home finance. It might seem a bit different, but it's part of their broader picture, right? How's that doing?
It is, yeah. Their sales RM strength in home finance grew 50% year-on-year. They now have 1,430 RMs focused there. Disbursements were 395 crores, up 57% year-on-year. And their AUM just crossed the 5,000 crore mark. It reached 5,027 crores, which is up 22% year-on-year.
Okay, but with lending, the big question is always asset quality, especially in a growing market. How are their NPAs looking?
That's the crucial point, isn't it? And they look strong. Gross NPAs are at 1.2%, net NPAs at 0.6%.
Very low.
Very low. And their CR capital to risk-weighted assets ratio is really robust at 40.8%. So it indicates they're growing, yes, but in a disciplined way, managing risk carefully in that housing sector.
So we've seen the numbers, impressive across the board, but looking beyond just Q1, how are they setting themselves up for the long haul? What are the strategic pillars here?
Well, the leadership vision is clear. Mr. Motilal Oswal himself called Q1 a landmark quarter. He emphasized how the results show their deep expertise, but also this huge opportunity from India's accelerating financialization of savings.
Right, that shift towards financial assets we talked about.
Exactly. He sees it as a multi-decade growth story. And he believes MOFSL is positioned to be a long-term value creator.
And that vision needs strong leadership. We saw a key appointment too, didn't we? Mr. Suresh Sharma as Chief Information Security Officer, CSO. Now, cybersecurity, it might seem technical, but why is this appointment actually really significant for you, the listener, thinking about financial companies today?
Oh, it's hugely significant.
Yep.
Mr. Sharma has over 20 years in cybersecurity. He was CSO at PayU Payments before this. His background covers everything: security risk, governance, regulatory compliance like GDPR, HIT-TIDE, PCI DSS, security frameworks like NIST, ISO 27001.
The whole alphabet soup of security standards.
Pretty much. And critically, protecting infrastructure in high-volume environments. So this isn't just filling a role, it signals a really deep, proactive commitment to protecting digital assets, client data, building and maintaining trust. It's absolutely fundamental now.
And speaking of digital, they seem to be investing heavily in tech, AI, LLMs.
Yeah.
What are they actually doing with it? How does it help clients?
They're deploying quite a range of tech. Things like AI-driven smart search in their apps, an alpha generator for AI research recommendations, hyper-personalization tools too.
Trying to tailor things more.
Exactly. Plus, LLM-powered chatbots for queries, a Rise Super app for, all financial needs in one place, and StratX for automated trading, like an algo marketplace. It shows they're really focused on using data and AI to be more efficient, more responsive, and ultimately give clients a better experience.
You can't do any of this without good people, though. They mentioned having over 13,000 employees.
Over 13,270, yeah, with about 23% diversity across the group. And they hired over 1,300 people just in Q1. And they've been certified as a great place to work for the 8th time.
8th time. That says something about culture and retention.
It really does. They invest in leadership programs. They're building a young leadership practice. Focusing on that talent pipeline is crucial in this industry.
Okay, and then there's ESG. Environment, social, governance. It's not just about profit. They got an adequate rating from CRISIL with very good disclosure. What does that mean in practice?
Well, it translates into quite a few concrete actions. Environmentally, they're pushing paperless processes, handling e-waste responsibly, using green IT. They even have vertical gardens. They recycled over 8 metric tons each of dry and wet waste, installed sewage treatment plants.
So real operational changes.
Yes. And socially, they delivered over 9.6 lakh hours of soft skills training, held health camps, introduced a switch-off policy for work-life balance.
That's interesting. Promoting balance.
Yeah. And critically, their CSR work. Investing in school infrastructure and education for over 13,000 tribal students in Wada, Maharashtra. Overall, their projects benefited over 18,500 people. Plus, they support centers at top B schools, IITs, even a new university.
So it's quite a holistic approach, beyond just ticking boxes.
It seems like it, aiming for value creation for shareholders and society.
Okay, let's zoom out, bring it all together. It sounds like MOFSL is really well positioned to ride these huge multi-decadal tailwinds in the Indian economy.
I think that's a fair assessment. India's GDP growth trajectory is just phenomenal, right?
Yeah.
Projected to go from $3.7 trillion now to maybe $30 trillion by 2047. Still the fastest growing major economy.
Yeah, and the market cap itself.
Expected to double in the next 4 years. Doubling. Adding something like 400 trillion in value.
400 lakh crores, or about 4.8 trillion US dollars. Just staggering potential.
It is. And that creates massive opportunities in everything MOFSL does. Broking, asset management, wealth management, investment banking. And it connects directly back to that financialization of savings trend we keep mentioning. More Indian household money moving into equities and funds.
Driven by digitization, too, presumably, making it easier for people to invest.
Absolutely. Digitization is fueling huge retail participation. You see it in the demat account numbers, the relentless rise in SIP flows. Plus, the number of wealthy individuals in India, HNIs, UHNIs, billionaires, is set to grow significantly by 2027. That creates this vast, expanding pool for wealth management services.
What a deep dive indeed. We've covered record profits, that unique twin engine model, the tech investments, people, ESG. MOFSL's Q1 results really do paint a picture of a company trying to strategically align itself with India's whole growth narrative.
Absolutely. And, looking at all this, the numbers, the strategy, the tech, the social impact, it does raise a broader question for you to think about. In an economy like India's expanding so rapidly, where finance meets tech, meets societal expectations, how do companies like MOFSL move beyond just participating? How do they actually lead in shaping that financial future for millions? It's definitely a compelling thought, something to keep watching as we see how India's story continues to unfold.